Good morning, everyone. I am Liviu Popescu. I am a journalist at Ziarul Financiar, and it's my pleasure to welcome you at our webinar organized by Ziarul Financiar in partnership with Loxon, where we'll be discussing a new challenge coming up for financial institutions in Romania and for non-banking financial institutions and how to be prepared. I'm talking about the implementation of the International Reporting Standards 9 as of 1st of January 2023, this being the main subject of today's webinar because every company needs and wants to be prepared for a smooth transition towards this new approach. Together with my panelists today, to whom I thank them for the present, we will answer the most important questions and we will discuss the implementation of the IFRS 9 from the letter A to the last letter of the alphabet, because what comes in after the 1st of January 2023 involves us all. I will now pass the floor to the representatives of Loxon, Mr. Gabriel Șerbănescu, Managing Director of Loxon Romania, and Mr. Tamas Erni, CEO Loxon. Gentlemen, good morning. Thank you very much for this opportunity and for this partnership.
Good morning, everyone. Bună dimineața tuturor. Stimați participanți, îmi face o deosebită plăcere să vă urez bun venit, în primul rând, la acest webinar pe care Loxon îl organizează împreună cu Ziarul Financiar privind reglementările IFRS 9. Vă mulțumim foarte mult că ați acceptat invitația noastră de a participa la eveniment și sperăm să fie un eveniment reușit și destul de interactiv și vă mulțumim pentru asta. Webinarul nostru urmărește să ofere contribuții cheie la impactul și cele mai bune practici privind implementarea cu succes a unor astfel de implementări cum sunt cele din zona IFRS 9. Este o conferință virtuală în care veți auzi experți din diverse domenii și recomandările lor privind impactul și cum se poate gestiona această implementare de IFRS 9 în acest nou cadru reglementativ care în România devine obligatoriu începând cu 2023 pentru zona non-bancară. Avem și o zonă de panel și avem câțiva invitați și aceștia vor împărtăși experiențele lor cu privire la cele mai comune impacturi asupra zonelor de business, în special asupra zonelor de management a riscurilor și de raportare financiară. Vă mulțumesc foarte mult și vă doresc vizionare plăcută și with this occasion I would like Tamas to make an introduction.
Thank you very much. Thank you, Gabriel, and thank you for Ziarul Financiar for our partnership and having this webinar together. Yes, IFRS 9 is a big next step in the banking industry and towards moving ahead for a more risk-aware provisioning regime. It is especially important now when we all see what is happening with the economy. Inflation started to soar and the lending conditions everybody expects to strengthen in the next coming couple of months. There are debates to which direction the economy will move, but definitely it is high time to have a provisioning regime that is well prepared to the changes we are expecting in the economy. And this is what IFRS 9 brings us. And when I'm talking to chief risk officers, chief financial officers in many countries, not only in Europe, about what is to come and about the impact of IFRS 9, one thing is certain. Central banks are strengthening regulation. They want more and more automated, more and more audited and controlled processes, as much automation as possible in coming to the final provisioning results so that they can have a very good grasp of not only the single individual institutions' provisioning regimes, but that they have an overview about the entire financial services sector. And here non-bank financial institutions already play a major role because in many of the countries, lending not directly coming from the banks, but coming from non-bank financial institutions is increasing. So this is one of the key elements why central banks expect IFRS 9 provisioning from not only banks anymore, but basically all financial institutions.
Thank you very much. Gabriel Șerbănescu, Managing Director, Loxon Romania, and Mr. Tamas Erni, CEO, Loxon Romania. From Mr. Tamas Erni, we will soon hear in our next panel. Mr. Tamas Erni highlighted a few very important aspects regarding central banks, because we know 2021 was the year of central banks. And this year we have one of the rarest black swans there could even be in the economy. We have this conflict, this war going on in Ukraine, and unfortunately we also have a spike in COVID cases in East, in China. We've seen Shanghai being closed, so that puts pressure on central banks, on their ammunition towards the fight against inflation. Now we will get right into it because we have some important things to discuss about the IFRS 9. The most important one being, why is this regulation needed? Exactly what must be done, and when must institutions comply? So therefore, I invite now Georgiana Nitsa, Associate Partner, Financial Accounting Advisory Service at EY, to answer some questions. Georgiana, if you can hear us, good morning.
Good morning. Thank you a lot for this introduction. Today I would like to briefly discuss about why the IFRS implementation as basis of accounting was needed for non-banking financial institutions. What are the main differences as compared to the current accounting regulation, but not only triggered from this IFRS 9? And when do the non-banking financial institutions need to comply actually with these new accounting principles? International Financial Reporting Standards, the IFRS, reflect a better, true and fair view of the financial information included in the financial statements as compared to the current accounting regulations applied by non-banking financial institutions. The main explanations are that the methods of measuring credit risk for the purpose of financial reporting are better reflected by the IFRS 9 impairment model, which proves to be a more sensitive measure to the reality of credit risk as compared to the accounting model applied by these entities. Also, the IFRS financial statements will include more management judgments and assumptions. These financial statements will also ensure a higher degree of transparency of financial information to the users of financial statements through extensive disclosures. From this public awareness, I just want to point out that several companies and financial institutions in Romania, for which this public interest is high, such as listed companies in the regulated market or credit institutions, are already applying IFRS as basis of accounting. For non-banking financial institutions, the implementation of IFRS as basis of accounting is a process involving two streams. The first streams involve the preparation of IFRS financial statements for the years 2020, 2021, and 2022 as a parallel set of financial statements, in addition to the financial statements prepared in accordance with the local accounting regulations. The second stream involves the implementation of IFRS principles in the accounting systems, policies, and procedures of a non-banking financial institution, so as to apply IFRS as basis of accounting from 1st of January 2023. For the first stream, we have seen that the main challenges have been the identification of the differences in the accounting treatment between IFRS and local regulations, and the calculation of the impact resulting from these differences in accounting treatment. Here, the main differences are the mandatory calculation of the effective interest rate for a loan agreement or the implicit interest rate for a lease agreement from a lessor perspective. For this calculation, a review of all costs and commissions charged and incurred by an entity in connection with its loans or lease agreements need to be performed so as to establish the appropriate accounting treatment from a revenue recognition perspective. Another major difference is this calculation of the impairment losses by applying IFRS 9 requirements. From our experience, this has the most significant quantitative impact in the financial statements prepared by non-banking financial institutions as per IFRS. Thus, the forfeitary model based on the days past due currently applied by the non-banking financial institutions, which proved to be not sufficiently sensitive to risk, will be replaced by the expected impairment loss model under IFRS 9, which better estimates the measure of credit risk by also incorporating a forward-looking macroeconomic dimension based on multiple scenarios. Also, the interest revenue recognition on a net basis for an impaired exposure based on the net carrying amount of an exposure, the so-called unwinding, is a source of difference. IFRS 16 requirements from a lessee perspective bring new accounting rules for the recognition and measurement of the rent and operating lease agreements. Recognition of deferred tax will also trigger a difference in accounting. In addition to these differences in accounting treatments, the preparation of IFRS financial statements has been quite challenging due to the extensive disclosure requirements of IFRS, mainly IFRS 7. Under this standard, extensive information on credit risk, interest rate risk, and liquidity risk need to be provided, including sensitivity analysis. From what we have seen in practice, the non-banking financial institutions that are part of a larger financial group were better prepared to provide this first set of financial statements as for 31st of December 2020, as some of the IFRS figures to reflect the accounting differences between IFRS and local requirements were already prepared for group reporting purposes. However, we have seen that only few of these entities had a full set of financial statements prepared. Consequently, for the most of the non-banking financial institutions, the preparation of IFRS financial statements for the year 2020 was performed in accordance with IFRS 1, first-time adoption of IFRS. The second stream of this journey for IFRS implementation as basis of accounting, a stream that non-banking financial institutions are also currently undergoing, refer to the development of accounting systems, policies, and procedures in accordance with IFRS principles that need to be finalized by 1st of January 2023, which is the date of applying IFRS as basis of accounting for non-banking financial institutions. This implementation process needs to be organized in a structured project that usually includes a gap analysis phase, a development phase, and an implementation phase. The gap analysis phase has the purpose of identifying the differences in accounting treatment for non-banking financial institutions' operations. If these differences have been identified and documented for the purpose of preparation of financial statements, no further analysis is required. However, a review at this stage is also recommended. Analyzing and evaluating the impact at the level of the IT processes and systems is another activity of this gap analysis phase. IFRS trainings are also an important component of the process, as people will also need to acquire the knowledge of accounting as per IFRS principles. The purpose of the development phase is to elaborate a plan for the modifications of the information system in accordance with the accounting policies adopted by the non-banking financial institutions as per IFRS. And also the accounting monographs need to be developed to reflect the new accounting principles. The implementation phase is the one in which these differences need to be implemented. In conclusion, the main challenges for the implementation of IFRS as basis of accounting will come from the implementation of the effective interest rate calculation, of the impairment loss model, and to perform the adjustments to the accounting and reporting systems to reflect the principles of accounting under IFRS. The implementation of IFRS as basis of accounting will be a quite challenging process involving people from several departments, such as finance, risk, accounting, obviously, product development, leading also to changes in accounting system and reporting framework. Thank you a lot for this overview.
Thank you, Georgiana Nitsa, Associate Partner, Financial Accounting Advisory Services at EY. I've noted a few key ideas. First one being that the IFRS 9 measures credit risk are better reflected by the standards, and the main challenge will come from effective interest rate net calculation. So because we are talking about some major challenges coming up on the horizon, and We have around 8 months left before this implementation comes into effect. And as we are seeing right now, times are strange, are not quite normal as they would have been like a couple of years ago. I will now pass the floor to Mr. Balázs Gyutyai, Business Line Manager at Loxon Solutions, because we need to know that this challenge requires a good partner for a smooth transition for this approach. And we need to know how to prepare our next step. Mr. Balázs Gyutyai, if you can hear us, good morning.
Good morning, everyone. Thank you very much for having the chance to participate in today's webinar. And first of all, welcome all the attendees of the webinar, and thanks for the previous presentations and discussions. I hope that you can see my slides in the presentation. Within the next few minutes, I would like to briefly just introduce that who Loxon is, who we are, and what we can offer to you, and how we can support this entire IFRS 9 transition for non-banking financial institutions. Okay, so regarding Loxon, Loxon is a very niche player in the lending, collection, and risk management IT business solution provider industry. We are just focusing for banks and financial institutions. We are really proud to having more than 70 customers of us in more than 25 countries. Loxon was established in 2000. We are having 6 regional offices. The headquarters is located in Hungary, in Budapest. We are very active in the Romanian market starting from 2002, and in 2007 we established Loxon Romania, which means that within the last 15 years we are very deeply involved, and we have a deep presence here in the Romanian market. Okay, regarding the different products and services, we are providing not just IT applications, but business solutions and advisory services also to our customers, including the entire loan origination and lending areas for retail and SME corporate segments as well, offering rating, scoring solutions, covering the banking book related collateral management activities, early warning solutions, covering the entire soft and hard collection processes, Basel risk management solutions for capital calculation, regulatory reporting for all kinds of risks. We are also providing financial services by using Oracle Financial Services analytic applications. And for the most important part for today, this is absolutely and obviously IFRS 9. So I will explain it in detail. So here, regarding just a couple of major references of Loxon, you can see here big European banking groups, starting from UniCredit, Erste, Société Générale, OTP, and so on. And here what we do want to highlight our presence here in Romania, including BCR, BRD, Raiffeisen Romania, OTP Bank, Exim Bank Romania, Banca Romanesca, and so on. And let's jump into the main focus for today, which is obviously IFRS 9 and what the capabilities of our solution and what services we can offer to you. Here just a couple of references I wanted to highlight in respect of IFRS 9, and here you can see also that we are really proud to have, for example, Exim Bank Romania as one of our customers in respect of IFRS 9. And here I can also share with you, obviously, just with the non-disclosure agreements that we are having, that we are also working together right now with the non-banking financial institution right now in Romania in respect of the IFRS 9 transition and to implement our solution to them. Okay, so why I do believe that Luxon is a good partner in case of IFRS 9 transition, and I try to reflect back to the points that Georgina also highlighted. First of all, we are at the last moments, and obviously this is the sense of urgency that we are experiencing now. IFRS 9 transition is a really complex activity which involves also preparation of IFRS 9 financial statements, changing the previously used accounting standards to the new one, changing the classification and measurement approaches, how we are measuring and determining credit risk, how to include different macroeconomic adjustments and forecasts in our credit risk and risk parameter models. And obviously there is also a main challenge if we are talking about an IT application implementation and delivery. And here, if we are considering this as a complex landscape, once again, Luxon is not an IT development company, but business solution provider company. So here, we can offer you our deep and relevant experience in credit risk models, data management, macroeconomic forecast, advisory and consultancy services, including accounting, risk and impairment models, methodologies and areas. And obviously we can deliver you one IT solution. So basically covering everything as a whole. Starting from A to Z. And this is also true, obviously, for a non-banking financial institution, even if the case is that we do have limited data environment. On the other hand, what I wanted to highlight is that we are also working together with leasing companies here in Romania, and we do have experiences implementing, developing different PD and LGD models, which is obviously one of the main basis of the IFRS 9 ECL and provision calculation. Regarding the next point, what I wanted to highlight is that our solution is a business solution with strong business parameterization capabilities. And this is absolutely a glass box solution. So you are seeing within the system how actually everything is calculated, starting from the different accounting aspects, the IFRS 9 staging criteria, the different risk parameters, risk models, and the ECS, and the rules and the conditions and the characteristics can be changed by your own without our involvement. And to reflect back to the points that Tamás mentioned in his welcome speech regarding the changing environment, the changing macroeconomic factors that we are experiencing right now, I would consider this as one of the key advantages to have a flexible solution that enables you to react to the changing market conditions or to the changes in your portfolio. And actually this is the next point I wanted to highlight, not just in respect of regulatory provision calculation and reporting, but obviously this would enable you to have a very good strategic tool that you can use for simulation, what if analysis, scenario analysis that you can utilize afterwards to make any business decision within the financial institution. Regarding the system itself, we are really proud to have easy to use process workflows, having manual expertise and override option to take into consideration with complete audit trail, The system was defined and designed in a way to have advanced graphical user interface focusing on the business needs, business aspects, and crucial business KPIs in it. And I think there was also one point previously highlighted what the central banks, national banks are requiring in respect of more and more control processes, automated processes, transparency, and audit trails. So we do believe that the solution that we are delivering can fulfill these expectations. The other point, if we are talking about IT implementation, obviously how to integrate a solution in a complex IT architecture, how to and where to gather all the necessary information that does exist or might exist in the current IT landscape. And here we do have strong experience on this. Including integration with general ledger systems and to cover all the posting requirements in respect of IFRS 9. On the other hand, we're quite sure that our gathered experience in the last couple of years in respect of IFRS 9, both in the region in Central and Eastern Europe and in Romania as well, and the already approved compliance with National Bank of Romania rules, regulation, disclosure requirements, the solution that we can offer to you would fulfill all the expectations on your side. Regarding some IT aspects, Loxon can deliver either on-premise solutions installed and running on the cloud. We are also working together with other partners, and right now we have some pilot projects in other areas, in other regions where actually there is a system operating as a system as a service, and several non-banking financial institutions would use this system and the services of IFRS 9 from our side as a system as a service model. So this might be also relevant and interesting to you. Regarding the next slide, and I think this is the heart of the solution and the services that we can provide to you, obviously on a modular basis. So what parts or what functions are required, we can configure the modulars accordingly. The first one is obviously if we are checking the upper side of the presentation to have all the necessary information and data to be available in the system, starting from different outstanding on-balance, off-balance exposures, the collaterals, the risk mitigants, different informations about customers, the contractual cash flows, which is obviously a very important part for the effective interest rate that Georgina also highlighted previously. And what we can offer to you here, an integration services to extract, transfer, transform, and load the data to our IFRS 9 solution. And we are really proud to have strong business technical validation checks, GR reconciliation, and functions to support the data validation, data modification, and sometimes the data enrichment part of this project, because as per my experiences, having proper, accurate, and complete set of information and data to have the chance to perform and calculate all the necessary accounting, risk parameter, and ECL calculation, and afterwards to have the proper reporting towards National Bank of Romania and generate the disclosure requirements would require good and proper set of data. And here we can also offer you our services, how we can support. Regarding the heart of the system, this is in the middle of this. The first part is regarding the IFRS 9 accounting functions and features that we can offer to you, including the business model and SPPI test, IFRS 9 measurements, and how to classify the different financial instruments between amortized cost, fair value through profit and loss, or fair value through other comprehensive income, effective interest rate, amortized cost calculation, fair value calculation for the items measured under fair value, net gross interest income calculation, fee amortization, IFRS 9 subsequent event handling and unwinding, as also highlighted by Georgina. So here we really covering all the end-to-end requirements towards IFRS 9, what actually the regulation expects from non-banking financial institutions. And here the GL posting part that I do want to highlight because this is very crucial. The other point I wanted to highlight is actually regarding the other part of IFRS 9, and we are using IFRS 9 as a risk-aware methodology and risk-aware concept, somehow bring closer and have a transparent and common understanding of the portfolio and all the measures between finance, accounting, and the risk departments. So the other point is regarding the risk areas. So here covering IFRS 9 staging, classification, how to consider the significant increase in credit risk, the different characteristics, cooling, healing period, and so on, calculation of 12 months lifetime PD, the inclusion of macroeconomic adjustments and macroeconomic forecast into the lifetime PD calculation, LGD calculation, and obviously all the risk factors that are relevant for IFRS 9 if we are talking about non-banking financial institutions, like prepayment rate, Q rate, CCF, utilizations, and so on. So this is something also covered by a system. And we are really proud to have all the methodologies available in our system, and that we can deliver to you, already approved by the National Bank of Romania. And we are really proud to working with the big four companies in respect of having their approvals as external auditors on both the methodologies that we are delivering to our customers and both the system. So that's it. Apologize. And if we are moving forward, how to cover the provision ECL calculation, both on collective side, and if we are talking about individually assessed customers and individually assessed financial instruments, we are also covering different exposure, collateral, expected future cash flow based approaches as well. And here what you can see, the system has built-in workflows, and each of these activities and steps are calculated one by one. And in each and every point, we are providing the possibility to bring expert judgment and let's say manual override, management overlay to be considered here, because this is also one point was highlighted previously. This is very crucial to let the chance for expert judgments and overlays whenever it's possible. The system obviously supports the different regulatory scenarios and calculations, And on the other hand, due to the built-in flexible parameterization engine, different what-if scenarios, stress testing calculations can be performed, and you can compare the different results by changing the risk parameters within the system for all kind of parameters. And last but not least, if everything is calculated by the system would obviously provides all the regulatory reports, detailed audit trail reports, warning reports, management reports, drill downs, analytics and analysis reports, and if required, even the IFRS 9 disclosure can be generated from the system. Okay, so that was the brief overview of the functions and services that we can provide to you. And obviously, once again, these are sub-modules, sub-features, so we can configure the system according to meet the expectations. For example, this is also highlighted that non-banking financial institutions, part of a huge group, might be in a better position. And for example, if all the 12 months PD, lifetime PD and LGD figures are available and provided, for example, from a group, we can configure the system like this to receive them as an input. Okay, here I would have some further slides just to go into the details for each of the previously mentioned points. I wouldn't touch all of them, but the key aspects I would highlight. So here regarding the data, once again, data is a very crucial part. The system provides you the chance to have a different set of versions for different value dates. So for example, you can have alternative fine-tuned reconciled data, let's say for end of Q1, and you can run different calculations, analysis, or even forecasts on this. The system do have the flexibility in respect of data modification in a very audited way, and obviously provide you the chance to upload any structured data on the top of whatever have been extracted from the already existing IT landscape, because this is our experience that there are a couple of sets of data that is available, but maybe in Excel files, maybe in a structured way, and it can be also utilized within the system. Regarding the different classification and measurement approaches, I think I have already touched all of this. The main message here that I wanted to reflect, that the application was designed and built in a way to have the chance to parameterize these business rules according to your portfolio, according to the characteristic of your products that you are having. And this this provides you an outstanding flexibility in this reflect. Regarding the different PD and LGD modeling, once again, via the advisory services that we can provide to you, we can model and deliver methodologies for Q rates, prepayment rates, recovery rates, CCF, market indices, and so on. And here you can see a wide range of PD and LGD methodologies that we are supporting as built-in models within the system. Regarding the macroeconomic overlays, here also supporting several aspects, including the macroeconomic factors forecasts. The application has built-in integration with R and Python, which enables us to have really customized methodologies and approaches to be applied to the portfolio of yours. Regarding the expected credit loss calculations, just 4 additional points I wanted to highlight besides the individual and collective assessment coverage. The first one is to support different credit risk ratio calculations, how to handle, for example, the purchased or originated credit impaired instruments within the system, and how we can support even the on-demand ECL simulation or calculation that you can utilize during the credit decision process. And obviously, different coverage for different scenarios, either in respect of macroeconomic forecast, or if we are talking about individual assessment, the different scenarios for expected future cash flows is something supported by the system. And this is my very last slide, just as a coverage in respect of how to visualize and what kind of KPIs and analytics to be provided by the system, because I think this is very crucial, not just because of reporting purposes and analysis, but also how to make business decisions and how to extract key business KPIs aspects from the system, starting from ECL impact, profit and loss impact, different ECL movement analytics, the composition of monthly ECL, and the changes of your portfolio from period to period. So we are quite sure that not just the advisory services, the business logic and the business flexibility included in the system, but how we can transfer it to data with business insights is one of the strong features of the system. So that was all from my side. Thank you very much, and I pass the word back to you so that we can move forward. Thank you.
Thank you, Balázs, for your comprehensive presentation. Thank you for providing the necessary information regarding Loxon activity, business solution provider and not an IT company. Although I have to admit the calculation engine looks very high tech. I understood that it can be configured on people's needs and every profile. BCR, Raiffeisen, OTP, Unicredit in your portfolio, working with non-banking financial institutions, plus leasing companies. We will now move to our panel discussion. I must say that if the viewers have any questions, they can comment on our live stream, and my colleagues will make sure that the questions come to me so I can address them to our panelists. We have now in our panel Mr. Tamas Erni, CEO of Loxon, Alexandra Smedoiu, partner Deloitte Romania and president of the CFA Romania Association, Răzvan Butucaru, partner financial services and advisory leader Mazars Romania, and Monica Cura, director of the accounting division of Raiffeisen Bank Romania, one of the biggest banks in Romania. Good morning, everyone. Thank you for being here with us. My first question is towards Alexandra Smedoiu about the current situation in Romania in what comes to implementation of the IFRS 9. What is the are the financial institutions in a good readiness state regarding this transition?
Hi, everybody. Thanks so much for the invitation. Happy to share some of the experience we have with IFRS transition. Luckily, this is not the first IFRS transition on the Romanian market, so there is already some experience from the financial institutions. I think that first-time adoption of IFRS for statutory purposes in Romania went very well, and we can draw very good conclusions out of that. As regards non-banking financial institutions, I think that the transition has been well announced, and there was enough time for preparation. So our assessment is that non-banking financial institutions are ready for this adoption of IFRS starting 2023. What I would like to point out is that our colleague from UI, Georgiana, highlighted a few of the challenges, let's say. I just wanted to add on top that one of the other challenges which comes with the transition to IFRS is the tax challenge. Again, here we draw on the experience of the transition of the financial institutions to IFRS and to IFRS 9 from IAS 39. Luckily, the tax law contains now amendments which are aimed to cover this transition. However, the transition to IFRS and especially IFRS 9 poses some challenges as regards the tax implications for the non-banking financial institutions, as the differences coming from the risk assessment and the different rules for provisioning need to be assessed also from a tax perspective. As of 2023, statutory accounts become IFRS accounts and therefore tax accounts. So it's very important that non-banking financial institutions get their tax treatment straight for the adjustments. Also, there would be an expectation of a number of differences, either positive or negative, on the balance sheet of the non-banking financial institutions coming from this transition. And depending on that position for the adoption of IFRS 9, there will be either maybe some tax deductions or supplementary tax deductions for the financial institution, either a release of the previously computed risk provisions, where there is a judgment, let's say, if that release would trigger an immediate tax impact, or it would trigger the obligation to set up a deferred tax liability. So there are a number of options available there. The important thing is that now, as of today, we do have legislative provisions which cover also the tax aspects of the implementation of IFRS and especially IFRS 9. And with a proper assessment before the effective date, I think the non-banking financial institutions would be ready to address these challenges.
Thank you, Alexandra. Going now to Răzvan Butucaru from Mazars. What is your take on the readiness of the financial institutions in Romania? And as a follow-up, what will be the major impact on the implementation on the banking sector in Romania? Hello, Răzvan.
Hello, everyone. Thank you for the invitation. In terms of the readiness of the non-banking financial institutions, I think there is quite a broad range of expectations. So there are some institutions which are part of large groups which can be have already some models and have some experience in implementing IFRS, although we encountered difficulties here as well, because sometimes they don't have the appropriate data and they cannot apply the models from the group. And of course, for the non-banking financial institutions which are more locally run, there are some more difficulties in terms of readiness, in terms of mindset. So I think IFRS is first a change in your mindset and how you report. So from a compliance reporting framework, as it is currently, to a fair presentation, reporting framework, if you want. And this entitles impact on many positions, on many aspects of the preparation of financial statements. One aspect which I think is worth mentioning, and it was pointed out by several speakers, about data and data quality. So, and IFRS is, you need data, you need analysis in order to better, assess, better predict, better base your assumptions on. And data quality, we noticed that, based on our experience with the implementation, there were some issues, because you need to look also on the previous periods in order to be able to report properly on IFRS. Of course, as we all mentioned, the technical standards, which are quite complex. IFRS 9 is one of them. There are many others. I would point out here IFRS 7, which entitles a lot of disclosures in the financial statement, which are more detailed than the non-banking financial institutions were used to up until now. And this, again, leads us to data quality, to software capable of producing that data, of changing the procedures, of changing the reporting methods. So it's kind of a complex change. And in terms of the impact, if I recall correctly, your second question on the banking sector, in fact, on the non-banking financial sector, I would say that it's a good step. It's an important step towards comparability, because you can have a framework which is IFRS, which is recognized, which you can compare the sets of financial statements between different institutions, banks, non-banking financial institutions, which is quite good. I think it ensures a lot of transparency, and this again, it's a plus. Of course, I think it will entitle more knowledge on the standards in order to interpret the financial statements, and of course, in order to prepare them. All in all, I think the impact would be a good one. I think it will be an alignment with the banking institutions, which are already reporting on IFRS. I think it will ensure consistency, and it will show a better view on the situations of the companies, and be able to maybe factor in more accurately the rapid challenging environment that we are living in.
Thank you, Răzvan. I am now very keen in hearing what the representative of the banking sector in this panel has to say about the major impact of the IFRS 9 in the banking sector. Monica Cura, if you can hear us, hello.
Hello, I'm happy to be here with you. Well, as it was said, IFRS 9 introduced a forward-looking view on the credit quality, while the banks recognize the credit impairment before the loss event. The bank must manage the relationship between credit impairments and regulatory capital, first of all, in order to avoid an unexpected capital shortfall. Speaking about, let's say, the last part of IFRS 9, not 4 years ago, the most important impact, it was given by the overlays that we had to estimate in respect of the COVID-19 effect on the models. Going forward, the use of overlays across the institution are subject to monitor, and are also subject to monitor by our side, but also by the supervisory side, and should be limited gradually. That's why, let's say, the biggest challenge in IFRS 9, it is related to the modeler's job, that they have to capture in the model the new reality, and have to embed a model that shows also this kind of crisis that just happened. And as you said earlier, we are also in the looking to the inflation and the new economic reality that is coming. A very important thing is that mentioned also previously. It is related to the data quality and data availability in the IFRS 9 model. This is extremely important, and what I like to Loxon presentation, it is important to look, let's say, to an application that is looking end to end to the process. So this is showing an integrated process that is reflecting the proper adjustments.
Răzvan,
in the losses.
Thank you, Monica, very much. Răzvan, I have a question regarding Bala's presentation. I'm thinking here about the key practical challenges that may be encountered in the banking sector during this transition. What is your take on this?
I think it will be and it is still a big shift, because as mentioned during the presentation, having a reliable tool and reliable model for IFRS 9 provisioning model, I think it's key. There is a lot of aspects to have in view, from data entry, data processing, from modeling actually the data, to the outcome and to the risk assessment part. it's not easy because IFRS 9 also looks to the past. So you need reliable data from the past. You know how the probability of default evolved, how is your segmentation of the portfolio. If you can have that segmentation, then you need to look also currently, and of course you need a very important the forward-looking component for what is to come. And how you embed all of these components is quite complex. There might be situations when some institutions they might have a simplified model, but there are many institutions which need a more complex model, and it's something that many of them they are not used before, which might entitle a lot of effort, a lot of interpretation. It's a change from software, but also on the mindset, on the procedures, on the technical capabilities. But I think it's a good point as long as it is done with a good view from the beginning. So not a quick fix, but something to have a long-term view. And going to the long-term view means that companies should be aware that having proper gap assessment, a proper implementation tool, a proper process, procedure, proper modeling. I think it's key because it will not go away. It will continue and it will grow to be more complex. So thinking ahead and doing the things right from the beginning, I think this is one of the most important things I would recommend, and I take us from our previous experience in implementing this.
To keep the spirit of journalism, the hardest question always comes last, and I'm passing the floor now to Mr. Tamás Ernyi, CEO of Loxon. What we are seeing nowadays, some may argue that is a déjà vu, because sadly in China we are seeing, as I mentioned earlier, a spike in COVID cases. We are seeing cities with millions of people being locked that will eventually send waves in the economy. Let's see how prepared we are this time. Do you think that COVID-19, the pandemic, and the IFRS 9 are related in any way? Microphone, if you can turn the microphone, please.
Well, thank you for the question. And honestly, I am very curious about what happens now in China, because I remember when COVID started. It started back in 2019, and it started by hearing some news that, oh, there is a new virus in China, but it's far, far away. We don't have to worry. And then within basically a few weeks, it was in Europe. So this is some area of concern for me, what really happens in China and whether it starts a new wave. I don't see, coming back to your question, a direct relation between IFRS 9 and COVID, but the indirect relation through the economy and through the inflation that we see now. And because of the inflation, the expected increase in the volatility of the economy, that will have a direct impact on credit risk, that will have a direct impact on the risk models we use to calculate the IFRS 9 provisions. Through these indirect channels, I expect a very strong relation between a potential new COVID wave and IFRS 9. Also, what we have learned in the last few years is that IFRS 9, fortunately, is a quite flexible regulation. And we have also seen with the introduction of the overlays that the regulators are basically moving and changing according to what the environmental conditions expect from us. So I would expect that there will be more to come, and the IFRS 9 regulation will be adjusted if new implications, maybe from COVID or maybe from the soaring inflation rates, will dictate this.
Thank you. Thank you very much. I would like to thank our panelists today. Alexandra Smedoiu, Deloitte Romania and President of CFA Romania, Răzvan Butucaru, Partner Financial Services and Advisory Leader, Mazars Romania, Monica Curea, Director of the Accounting Division of Raiffeisen Bank Romania, Mr. Tamas Ernisi of Loxon, and in the end of our webinar, Mr. Tamas Ernisi, I have a couple of questions in regards of closing this webinar. Regarding investors and clients, what will change with the implementation of this IFRS 9? What they need to know from the 1st of January next year?
IFRS 9 is a journey. So, and this is a journey that is with us in the last few years. Banks already moved to IFRS 9. And what we have seen is that the introduction of IFRS 9 gradually changes not only the calculations, but the entire way how we see provision. As Monica rightly said, IFRS 9 is an end-to-end story. We cannot see it from a risk perspective. We cannot see it from a regulatory perspective, from an accounting perspective, or from an IT perspective. But we have to see it as a journey with all these components, because the introduction of IFRS 9 basically moves away from a pure regulatory requirement to a much more risk-focused calculation of provisioning. The regulators moved the provisioning methods closer to the already more risk-sensitive internal ratings-based approach of Basel III. And now it will be very interesting to see that the already risk-sensitive IFRS 9 and the new Basel IV regulation, where regulators are a bit moving away from the internal ratings-based approach, how these will coexist next to each other and how it will move. So we expect a lot of changes coming now. Therefore, we see it very important, as also Monica said, to have an end-to-end platform where we can collect the information, where we can prepare the IFRS 9 models, where we can calculate the accounting adjustments, the risk models, the provisions. And this is in an end-to-end automated manner so that the bank sees the entire process together. It is not bound by human errors, and you see the points where to act and how to act. This is what we expect as a major change for the next coming years to come. And also we expect that there will be a few institutions who will start with the so-called tactical solutions, Excel-based solutions, not automated, some earlier models, because the background in the bank, the source systems providing the data warehouses, core banking systems, are not yet prepared for IFRS 9, especially in non-bank financial institutions and especially in the smaller banks. So we expect these institutions start with tactical solutions and then move to strategic end-to-end automated solutions. And in the last 4 years, we in Loxon, we have collected a lot of information and a lot of experience working in more than 20 countries now, how to manage the journey together with our customers, with our partners, moving from pre-IFRS 9 to a proper strategic IFRS 9 compliance. So this is what we expect as a major change that we will see for the non-bank financial institutions in the years to come.
Mr. Tamas Ernisi, before I pass the conclusion to you, allow me to conclude this webinar. 31st of March 2022, end of a quarter, end of a month. We discussed about today a new challenge coming right up in 8 months, the implementation of the IFRS 9. I would like to thank Loxon for this opportunity and for this partnership, and I would also like to thank our panelists today. I will now switch into my mother's tongue for the final words. Vă mulțumesc tare mult că ați fost alături de noi, vă mulțumim că ne-ați urmărit. Din partea mea, până data viitoare, fir întins la acțiuni câștigătoare. And now the final words to Mr. Tamas for the closing of the event and a conclusion. Thank you very much.
Thank you very much. I would like to thank also the panelists and the presentators and Zero Financiar, our partners, for organizing this webinar. We hope we were able to provide an overview about the challenge that is ahead of us. And for the ones who are not yet reasonably ahead on the road, to create a sense of urgency, because it's only 8 months ahead of us. And 8 months for such a complex and important project as IFRS 9 is not a long time. And we will see that these 8 months will pass very fast. So thank you very much for everybody who was with us today. I hope we managed to show you some ways to provide you some help in your journey to IFRS 9 compliance. And now we only have to work and make it a success. Thank you for everybody.